What is up, everybody? Investing Club here, back with another video. In this video, I want to do something I've never really done before and talk about 3 spec stocks under $5 that you could potentially make a ton of money on. And I'm just going to say this right off the bat because a lot of people hear that you can make a lot of money part, but they don't hear this other part. These stock picks are extremely risky, and you should never make these any meaningful part of your portfolio. You should only invest in these stocks if you are comfortable losing 100% of your investment. And furthermore, I am not a financial advisor, and this is not financial advice. So you have to do your own research, especially with risky stocks like these. Now, full transparency, currently I do not own any of these. I may start adding in the future, but again, if I did, it would be a very, very small percentage of my portfolio, probably under 5%. So before we get started, smash the thumbs up button for the YouTube algorithm. It helps push this video out to a larger audience, and it is greatly appreciated. Now let's get into the video where I talk about 3 spec stocks that you have likely never heard of before. So the first stock I have for you today is Global Cord Blood Corporation, ticker symbol CO. And Global Cord Blood provides umbilical cord blood storage mainly in China and Hong Kong specifically. Now, for a lot of you that probably don't know, I didn't know this until recently, umbilical cord storage is a huge industry. And you can see that right here. Their earnings are expected to grow at 30% a year over the next 5 years. So this is a very fast growing company, and they have huge margins of 83%. And the thing I want you to notice about this company is how undervalued it is. Their price to cash is 0.43. So to put that in perspective, the price of the stock is currently $270, and they have $6.28 of cash per share. This company is trading for less than the amount of cash they have, which logically makes no sense for a company that's growing this fast and is profitable. Again, this company could buy itself out if they wanted to, and this company has no debt, and their current ratio is over a 9. So this is a company that's loaded up on assets. They have no debt, and they're growing quickly. Their PE is only a 5, and this company has traded at a very high price compared to where it is now. If we look at the long-term chart, this company was a $15 stock a couple of years ago. So now what is the main risk of this company? Well, this is a Chinese company, and it is a small cap. Of course, the risk with these types of companies are that the huge amount of cash they have isn't real. Right, we've seen plenty of Chinese companies in the past be exposed as frauds. And I'm just concerned because, this honestly seems too good to be true. A company with no debt, more cash than the market cap, and they're growing as fast as they are. If this was a US company, I would buy this in a heartbeat. But the thing is, it looks too good to be true, and, in this case, it might be. Another cause for concern is the company hasn't done anything with all the cash they have. With all the cash they have just sitting around, it would make sense to invest some of it or do share buybacks with how low the price has gotten or start paying a dividend, but they haven't done any of that, which again makes me concerned and, makes me start to think, if they haven't done anything with all this money, is it even really there? Now, this company is owned in a large percentage by a hedge fund, so that might give you some extra confidence knowing that a hedge fund is invested in the stock. But I would really do some research on this if you were seriously interested in it. For the second company in this video, I will be talking about SilverBow Resources, ticker SBOW. And SilverBow is an oil and gas company that engages in exploration, development, and production of oil and gas, and they are located in South Texas. Now, like most oil and gas companies, this stock has gotten hammered, and they look relatively undervalued right now. We can see their PEG ratio is 0.09, which is literally insane. Their PE is 0.43, even though they're expecting to grow at a positive rate in the future. So essentially, this company is priced like they are about to go out of business. They do have a fair amount of debt. Their debt to equity is 1.24. But I think there's a fair chance that this company makes it out of this situation just fine. This is an oil and gas company, but they are hedged pretty well against the falling oil prices that we've seen, and oil prices have made a nice recovery off the bottom a couple of weeks ago. Again, this is another company that almost has as much cash as their market cap. Their price to cash is 1.4, which just screams undervalued. If we take a look at the longer term chart, In 2018, this company was worth $30 and they're currently trading at around $4 right now. So if we see oil prices continue to recover and if we see a new bull market in oil, this company could return to the $30 level where it was a couple years ago. And that is a big if. That would result in a 7 to 8 times increase for this company. Again, it is risky. I mean, I'm talking about these companies being undervalued, but there is a huge amount of risk. So, even though they seem undervalued, I'm not extremely confident just because of the uncertainty in these stocks. All right, and for the last stock in this video, we have Trivago, ticker symbol TRVG. And if you've never heard of Trivago, they are an online travel company. Now, I've mentioned Trivago in one of my past videos, and they are a pretty interesting play in the travel sector. As you know, the travel industry has taken a hit, and pretty much all travel stocks, all hotel stocks, all airline stocks have been hit hard by this economy. So what do I like about this company? Well, they have no debt, which is a huge plus when a lot of these travel companies are very leveraged. So in terms of risks for this company, defaulting on their debt isn't one of them because they have no debt. They have a huge amount of current assets. So this company is positioned well to ride out a downturn, an extended downturn in the economy. Now, the biggest risk of this company is if they will be able to become profitable. Over the past 5 years, their earnings have grown at 20% a year, but for the next 5 years, their earnings are expected to decrease at 3% per year. And so this is a company that recently became profitable, but now they will probably see a few quarters, if not a few years of losses. And the question I have for this company is, will they become profitable again? If they did, then I could see the share price jumping massively from where it is today. Their PE is at a 30, which is not low. But again, if we see the huge growth in the earnings like we saw in the past, then this company could potentially increase in price. If we take a look at the long-term chart, when this company first became public, it ran up to around $25. Now, do I think this company is worth $25? No. I would say this company is safely worth $5 to $10 if we can see them become profitable and grow earnings again. And at a current price of under $150, that is a huge amount of upside for a company like this. Also a company with no debt. So again, this company, Trivago, doesn't have the same risks as a lot of the other companies of defaulting on their debt. But what they do have the risk of is falling earnings, is negative earnings, especially in a time like this where there will be less demand for traveling. Again, just so people hear this again, I don't own any of these stocks, and these stocks are extremely risky. So only invest money into these that you can afford to lose, and definitely do extensive research on any companies with this amount of risk before you buy. But those are the 3 stocks for this video. Leave a comment down below and let me know what you think. If some of these seem interesting to you, they definitely seem intriguing to me. And I would possibly be considering adding at least 1 or 2 of them to my portfolio in the future. So if you like this video, leave a thumbs up, subscribe to the channel if you haven't already. I'm always trying to bring you stocks that no one else on YouTube is talking about. And if you want to see more videos like this, subscribe to the channel and hit the bell so you can receive notifications whenever I post. So that's it, and I'll see you on the next video.